Hello and welcome to traders and investors. I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is March 23 and we're starting with analysis and trading tips for euro-dollar pair with Jakub Novak. But first, let's have a look on 5-minute chart for analyzing yesterday's transactions. The pair tested 1.0795 at a time when the MACD line was just starting to move above zero, which was a good reason to buy. There was an upward movement, however, it was not as strong as I expected. No other market signal appeared for the rest of the day. The Fed's decision on interest rates pushed euro up yesterday as traders saw hints of a return to monetary policy easing due to the risk of further worsening of the banking crisis. There is nothing else to look forward this morning apart from the Eurozone's consumer confidence indicator, so the focus is likely to be on the US session again, particularly on the release of the weekly jobless claims and volume of housing holders on the primary market. A rise in the latter could bring back demand for dollar, which will lead to a downward correction in euro-dollar pair. For long positions, buy euro when the quote reached 1.0941 and take profit at the price of 1.0995. Growth is possible and this will continue the bullish trend. However, make sure that when buying the MACD line is above zero or is starting to rise from it. Euro can also be bought at 1.0893, but the MACD line should be in an oversold area, as only by that will the market reverse to 1.0941 and 1.0995. For short positions, sell euro when the quote reaches 1.0893 and take profit at the price of 1.0839. Pressure will return if there is no bullish activity at the monthly highs. However, when selling, make sure that the MACD line is under zero or is starting to move down from it. Euro can also be sold at 1.0941, but the MACD line should be in an overbought area, as only by that will the market reverse to 1.0893 and 1.0839. How to trade GBP USD pair, Sebastian Seliga describes. The pound sterling dollar pair has made a new swing high at the level of 1.2335. So the bulls are making pressure on market just before the Bank of England interest rate decision today expected. The momentum is strong and positive, so the outlook remains bullish as the market conditions are not extremely overbought on the H4 timeframe chart yet. In case of further extension to the upside, the next target for bulls is seen at the level of 1.2394 and 1.2447 swing high. Here's on the next stage of our review is Laurie Bailey with AUD-USD pair focused. Let's have a look. Yesterday, the Australian dollar's first attempt to climb above 0.6730 ended with a sharp fall. But this morning the Marlin oscillator rose above the zero neutral line. And now it's leading the price to success. Consolidating above 0.6730 could take the price to the target level of 0.6873, which, given the somewhat wild nature of the Aussie, who often moves ahead of the market, may be an attainable target. We will discard the growth scenario once the price settles below 0.6640. The situation on the 4-hour chart was quite surprising. The signal line of the Marlin oscillator expectedly came out of the wedge to the downside. But then it turned upward and now it's in the growth area. The wedge is abolished. Now the price should consolidate above 0.6730, and this will be the first signal for the Aussie's further growth. That's all for today. See you online soon. Good luck.